Prince Pipes. It's the debut numbers, if you could call it that, since it has listed. It just listed, I think, 2-3 months ago. Let's then talk about what went by in the third quarter with the management of Prince Pipes. We have with us joining in on the show Nihar Chheda. He's the Associate VP for Corporate Strategy. Mr. Chheda, thanks so much for joining us. It's a steady quarter, you know, I mean, single-digit volume growth, which is not so bad. Margins have expanded by 150 basis points. So let's start off first by talking about, the top-line growth. I think despite the entire weakness in the market, as people are terming it, this entire weakness in the consumption environment, your top-line growth has been pretty steady. So could you tell us what went by? What was your volume growth? What was pricing like?
Sure. Firstly, thank you for having me. So in terms of top line growth, I think, you're right. I think real estate is, continues to be tepid. And if you look at building materials as a whole, isn't too exciting. But it's the piping industry which has been, standing out compared to the rest of the sectors. And the reason for that, I would say, is the market consolidation that's actually happening. So firstly is the shift from the unorganized sector to the organized sector. And secondly, I think within the organized, we've been seeing the sort of big are getting bigger. And a lot of the sort of regional players and fringe national players are going through, balance sheet constraints, which hampers their ability to, sort of provide material into the market. As a result of which, there's sort of major market share up for grabs, and we have been one of the front runners in being able to leverage this sort of market share.
Talk about the volume growth. What would you say about the volume growth in the quarter gone by? How would you look at volume growth going ahead?
So volume growth has been at around 5%, whereas the value growth has been around 10%. I think what's worked out well for us is our strategy of not only being there across polymers, but also applications. So, across plumbing, above the ground drainage, borewell, agriculture, as well as now underground drainage. As a result of which we are still very bullish in terms of, volume as well as value growth.
I think, Mr. Chheda, you have a good amount of your sales coming from the higher value-added products as well, as opposed to just your commodity bit. I would understand that's what's really leading the value growth. So if you could talk to us about the split of your sales, how much is coming from this plumbing business, underground piping business, etc., and how much is coming from your regular, polymer business?
Correct. So in terms of our, we have two broad buckets. One would be the domestic application, which would have plumbing and above the ground drainage products. And the second bucket would be agriculture, where we have irrigation as well as borewell products. So we always like it when we grow faster in plumbing and above the ground drainage products. And that is where the focus of the entire organization is. And plumbing and drainage tend to have sort of higher realization and higher margins than the rest of the product profile. And if I can add to that, what's really helping us is the sort of very strong government thrust that's been there on this sector. So the setting up of the Jal Shakti Ministry as well as the Nal Se Jal scheme, the one-line mission of which is to essentially bring piped water access to every rural household in the country. And we have actually already started seeing green shoots of demand in the plumbing and drainage sector. So whenever we grow in plumbing and drainage, value-added sales are going to be high and margins are going to be better. And you're right, product mix as well as pricing leverage have been the two sort of levers for margin expansion.
Seeing orders from the government on this Jal Shakti and whole provision of clean water to the rural areas. Are you getting government orders? Are you seeing traction there?
Yes, we are. We have started seeing traction in certain parts of the market. Where we don't directly sell to the government or the municipalities. It's through the channel. So it's our distributors who actually end up selling to the contractors or the state government. And I think that strategy has also worked out very well for us. So this is a strategy I actually like to call winning in many Indias. So if you look at our network today, it's strong not only across urban India, but also across semi-urban, tier 2, tier 3 towns, as well as, rural markets. So today, for example, we have a majority market share in an urban metro like Mumbai, while also enjoying very strong brand equity in the rural markets of, Haryana, UP, Bihar, which is where a lot of this demand is actually coming from.
Yeah, that was going to be my next question. Around 40% of your sales are actually from the northern parts of India, and we know what's been happening over there, right? Since I think mid-December. Have you seen any impact of that? And I suppose it will mostly be seen in the fourth quarter, if there is any.
Correct. So if you actually look at our sort of cost structures, freight is a very important part of our cost structure. So amongst the industry, we were actually the first movers to set up a manufacturing facility in the north, as a result of which we garner a very strong market share in the northern markets. In terms of it has been tepid across the country, demand, but like I said, the market consolidation is more than making up for itself. So there is supply constraint in the market, as a result of which the big are getting bigger, and we have been a major beneficiary amongst the top processors. And in terms of geography, another sort of market where we're seeing major growth is the eastern market, which around 3-4 years ago used to be contributing to around only 5% of net sales, which today is around more than 12% of net sales. So we are very bullish, despite being dependent on the northern zones. We still have a very strong pan-India presence, and we expect the eastern markets also to be a strong sort of contributor to top-line growth as far as geography is concerned.
Thanks so much, sir, for taking out time for us. Always good to get perspective from you.